Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. All right, daily chart, and you can see we had this lower band ride that took up most of trading 2 weeks ago. You can see that in the back half of last week, they bounced it up out of here. They converted the 9-day. They converted the 50-day. We rolled over into the December contract Friday into Monday. So you see this little hop here on the continuation chart. As we look at the hourly, and this is also a continuation chart, just to get an idea of the general tone of the tape. You got your 38.83 down here. I'm going to back this out one because it's been a while since I've done one of these. So they brought it down, they band rided it down, and then they bounced it. They've taken out the monthly pivot on the continuation chart in the process. What you've got now is it's kind of in the eye of the beholder in that you've made a higher high versus these peaks. Really, all that's left to go after is this 42.1725. My issue with the whole thing had been we've been trading. The bulls were really uncomfortable with anything above 4,000. Bears are super uncomfortable with anything underneath 3,900, as you can see here. So here's your 3,900 line, right? So I mean, you had some attempts. There was an attempt here. There was an attempt. They held it here. They bounced it here. They retested here, and basically higher lows, and then it takes off on Wednesday, and you never really see it again. More than enough opportunities for the Bears to convert 3,900. And the Bulls did a better job when they got back to their little kryptonite there at 4,000, because you can see here at 4,000, it was a problem, it's a problem, it's a problem, it's a problem. They converted it on Friday. And what we've seen so often in these situations is, when one side or the other figures out the area that's been a problem, it's not a 10 or a 15 handle pop. It's 20, 30, 40, 50 handles, because you've got a lot sitting above there. You got people that are like, well, okay, I'll see you above, and you're squeezing people out of positions. We had a great week, and we're having a great month, and the whole thing in the room, because we're not attacking this with any kind of assumptions. I mean, a simple scroll of Twitter for 30 seconds, you got people, every top is the top, and there's targets and all this train wreck shit out there that, everybody is dramatically more concerned about being right than they are about making money. I'll say that again. They're more concerned about being right than they are about making money. You are not in this to be right. You have to be ready. You have to be prepared to be wrong and prepared to change your mind as many times as it takes to find the winning side. Control your risk in the process and then catch the next leg. So, this is not the kind of tape, really no tape is the kind of tape where you come in and plant your flag and be like, we're going to do X today. Yeah, okay. Like price cares what you think. It doesn't care. But especially this kind of tape that is punishing traders it is punishing short-term traders with being early, and it is punishing short-term traders for digging in and saying, okay, well, if that's not the top, all right, we'll add. And then some little trade turns into some big trade, and then all of a sudden you're, then because you got to be right, because it's about that, it's not about making money, then you've suddenly, you've morphed and you emerge from the cocoon as a newly born swing trader. And that is when you can really, really, really fuck up your account. Don't do that stuff. Just don't do it. Don't do it. Worry about the 10 handles in front of you. Worry about price, what price actually wants to do, not what you think price wants to do, and go from there. So, look, talking about the December contract, You've got volume weighted average price sitting at 40.98, so right at the roundie. It seems like every day, or I would say 80% of the days, they are opening this tape at a roundie, or pretty darn close with a lot of inflection points in between. Hourly mid-band on the December contract is 40.9275. Volume weighted average price 98. 4,100. It's literally printing 4,100 right now as I speak. It's about 8:35 in the morning. Our proprietary moving average is sitting up at 41.05, and you get the 5-minute mid at 41.04. So between 92 and 41.05, you got a lot of traffic. Globex high 41.15. Daily mid-band 41.17. So what do the bulls want to do today? You want to get as far away from weekly pivot as you possibly can. You want to get up into 41.17, deal with the daily mid-band, and you want to close above it today. That's what you want. If you're the bears, what do you want to do? You want to take out this front month, this new front month hourly mid-band, close below, try to get back into in some of these areas from last week, and try to get, you want to be closer to 40.50 than 41.20 or 41.25 by the end of the day. The bears have dug themselves quite the hole. They're going to have to dig themselves out. But this is not the kind of tape where you're like, well, it's gone far enough. You don't know how far it needs to go. When it starts making consistent lower highs and it breaks and you get some news, fine. But I really have the sense that in a vacuum, this thing is going to take everybody and drag them behind the bus to the upside. It's a very typical price action. Take it for what it is, not what you think it should be or what you would like it to be, because price doesn't care. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll be back tomorrow with another webcast. Be good.